Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Abitibi Metals, a Quebec-focused mineral acquisition and exploration company focused on the development of quality base and precious metals properties that are drill ready with high upside and expansion potential. It's Jonathan Deluce. Welcome to the show.
Thanks for having me.
Yeah, thanks for coming on. I want to get started with gold. Obviously, this is a very exciting time for the gold sector. As we are recording this, once again, gold touching all-time highs. Despite all of this, many people I have on the show allude to the fact that we are actually still in the early stages of a long-term bull market for gold. I'm wondering if you agree how you see things playing out in the gold market.
Yeah, no, I agree completely. I think that we are the big fuel of this is large amounts of monetary debasement and mismanagement of interest rate policy of just the general markets for the last 20 years. So I think really we're in the perfect storm here. We have had 20 years of basically moving the can down the road. And when they had the dot-com bubble, we had the real estate bubble, which they bailed out, and now we have kind of the biggest bubble of all in the treasury market. And what we saw in 2020 is we had record low interest rates, we had record amounts of money printing, and really what that led to is huge amounts of inflation. And really the thesis of why, like I'm a generalist investor, and I don't think that investors should always be in the mining sector because it's such a cyclical market. And really, it's mining is either usually really good or really bad, and it's hard to find that in between. But because of where we are today, the fuel for the mining market really performing is here. And why I believe that that's such is again record levels of inflation, and we're just on the cusp, or we just saw the U.S. Fed cut interest rates by 0.5%. And I think the gold price kind of saw that coming, and is part of the reason why we've accelerated in the gold price up into that interest rate cut. But I think really the Fed is backed into a corner. The Fed has cut rates, although really, in my opinion, if we real the real inflation rate is still a lot higher than the target. But the issue that they're running up against is there's such large levels of US debt. And what that is doing is like above, I think I saw stats is like above 6 or 6.5%. The US government couldn't cover the obligation on interest payments within US debt. So really, I think what should have been done is you keep the interest rates high, start to cool real inflation. But again, they're cutting rates. I'm sure in the next couple of years we're going to see another round of money printing. And these are really factors that fuel the case for gold. And that's why I guess myself through Abitibi or other investments is very focused in the gold and commodity space because of there being such a great case for it. So really, I think we're very early on at $2,700 an ounce. When you look at the price of the Dow indice in comparison to the gold ratio in history, supports it being very undervalued. And you look at the East and what is being done with Russia and China and the BRICS nations. They are stockpiling gold at record levels. And we're I think next week we are going to have the BRICS meetings, and as part of the menu or the what's on to be discussed is BRICS currency, and they've been talking about it being potentially backed by 40% gold amongst another basket of currencies, out of the fear of issues in the U.S. dollar currencies worldwide as a result of kicking the can down the road 20 years, not accepting a recession. Um, and really, we look at the 80s coming off of a very inflationary period. Gold went up 25 times from starting at $35 an ounce. So when we look in the move that we've had to date compared to some of the moves historically amongst other highly inflationary periods, and we could be at the very beginning. You look at Pierre Lassonde that's projecting over $10,000 per ounce gold. Um, Amongst other influential and well-informed individuals in the space. And I do agree with some of your other guests that this is really the perfect storm. This is when I think the value it's probably the strongest thesis, one of the strongest thesis in history for gold.
Yeah, absolutely agree. And just recently, there have been some photos circulating on social media of a BRICS pay card that is going to be given to attendees, swirling rumors that perhaps this is going to be part of the payment system announced. So it will be very fascinating to be watching how that summit unfolds. We have seen a disconnect, though, between gold, the metal itself, and the mining stocks. Although we've seen some great performances put in by big producers, Kinross doing very well, Agnico Eagle doing very well. When you go further down the chain to the developers and especially the explorers, a lot of people expected a mania in the gold stocks when we see gold hitting all-time highs and continuing to move up like this. Why do you think that gap in valuation there? Why do you think we have not seen a mania occur in the mining stocks? And do you expect that valuation gap to close, perhaps as the gold price moves higher?
Yeah, I do expect it to close, and I think it comes down to people still trust the US dollar. I think that's a big part of it. There's not enough fear in the market as of yet, but I do think that is changing. But you look at the GDXJ, GDX, and compared to 2011 in the last run, and we're trading at fractions, although gold is up $800 from 2011. So I do think it's part of part of why trickling down why the junior mining market space is as tough as it is today, because you look at the levels of cash flow amongst the majors and you can compare that to trading history, and they're really trading like juniors. The leverage on these producers is very significant. I look at my own portfolio. Agnico's performed quite well, but Barrick at $28 a share, the high in 2020 was over $40, although we're much higher in the gold price. Part of that is, I think, is operational issues. We've had a lot of mine builds that have gone way over capex and what was projected. So I think there is a bit of fear of capital management amongst what is a very highly inflationary environment. But I think that's going to change. I think it was Crescat that put out a very interesting chart on looking at different industries and the level of cash flow, and not even like looking at the mining sector today. It's one of the strongest performing sectors on a cash flow basis. And eventually it will be viewed as just another business that funds will put money into on a cash flow or dividend yield basis. Also combined with what I think will be a poorer and poorer market for some of the other competing industries in this environment. So I do think we're going to make up the gap. I think we are now in a clear breakout in gold supported by a change in interest rate policy in the US, still high real inflation levels, trends from the East, um, and also hopefully just a few more quarters of good earnings from the majors. Like Agnico had excellent earnings. You're seeing that reflected in the stock price. You'll see that reflected in stock buybacks, dividends. So really good earnings will, I think, fuel this. If we see the majors performing, because I do believe they're very, very undervalued, we'll start to see the money trickle down to the juniors. And I think that's where we see the space getting really excited. And just a last thing, I think Rick Rule puts it very well. As of today, 0.5% of US investment available is in the mining and mining equity space or mining related space. The median in history is 2%. And in good markets, we go higher than median and then we revert to mean. But even just reverting to mean, which I think will easily happen, that's a 3 times move in capital into the space. And you compare the total market caps of all the producers, and we're still less than some of the single big cap stocks in the US, like Apple. So it's a small space when capital rotates back to it. So that's why I think it is great timing to be in the space.
Yes, and I do want to shift to discussing copper now as well. It put in fairly good performance this year too, going to $5 a pound in May. It's cooled off a bit, but a lot of forecasts are calling for much higher demand in the face of diminishing supply. The amount of time and money that it takes to bring a copper mine online is incredibly prohibitive. We're seeing all sorts of demand drivers. If you want to look to energy transition side of the narrative, to emerging economies and a new middle class coming to the forefront, demanding a higher standard of living, which requires electrification. How do you currently view that supply demand dynamic when it comes to the copper space?
Yeah, well, it's a unique time in the marketplace. As you said, there's as of today in 2024, we're just starting the deficits in the copper supply that are expected to increase significantly over the next 10 to 25 years. That's really fueled, as you mentioned, by the decarbonization movement, general population growth that's requiring a lot of infrastructure investment. When we look at just the US on its own, Biden approved a $3.5 billion uh, uh, power line or electricity upgrade in the US. And that's just one example of infrastructure upgrades that's needed. And a lot of that does need copper and other commodities that are in short supply. But really, when we look out to the long term of 2050, in 2050, the annual supply requirement is around 50 million tons. That's a 70% increase from where we are today. And looking out the medium term, we need another 10 million tons of production over the next 10 years. And that's an annual growth of between 5.5 to 6.5%. In comparison to between 2010 and today, that annual increase has been about 2.5%. So the supply case is strong, and I think, or demand case is strong, and I think we're up against supply shrinking. I think initial example of that is 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 partly where the copper supply is coming from. 50% of copper production as of today is from areas of political instability. We just saw an example in Panama of one of the largest copper mines in the world that was nationalized and taken offline. So it's an example of these black swans coming out of nowhere that are able to even hurt supply more. And really, production from tier one countries like Canada, like the US, like Chile, and Australia have decreased significantly over the last 20 years. And even the grade, you look at the grade of copper mines worldwide between 1991 and today, it's decreased by 40%. So part of that is a lot of the easy copper deposits have been found, and also combined with a lower and lower amounts of investment within exploration. So really, that's causing production numbers to go down between now and 2035. Out of the current production profile, it's expected to decrease by 15%. So really, we're in a market where demand is severely outpacing supply, and we also have pressures on mines and the ability to increase supply because, as you know, higher prices can help engage more supply, but you can't turn a mine on overnight. Usually, mines take 5 to 10 years to permit, and there's fewer and fewer of these low capex mines available. So it really, I think, it's going to fuel a much higher copper price, but also what's going to be more important is where that copper supply is coming from. As I do believe that copper could be viewed as a strategic asset and something that is restricted within the country, and a new variable that will have to be considered.
I think that's a perfect segue into discussing Abitibi Metals, how it fits into the picture. Maybe start, for those who are unfamiliar with the company, by giving us a general overview.
Yeah, so I'm the founder and CEO of Abitibi. I brought it public in March of 2020. And I think part of, I guess, one of my early comments, so myself, family office are the main backers of the company. We've invested over $3 million into the company. but we're not perma gold or commodity bulls. We've built companies in the airline business, in the real estate business, in the mining businesses. So we're not just focused on one sector. But because of the factors that we've mentioned, we really see the opportunity in the mining space. So we've been in the mining sector as a whole over 25 years, mostly in the private markets. But because of the opportunity that we saw in the marketplace, I decided to leave my job in mining consulting and Ernst& Young and found Abitibi Metals, bring it public in March of 2020. We acquired our first flagship asset, which was the Becheville Gold project in Quebec, up on the same east-west as Detour, the Detour mine operated by Agnico. And then the market conditions turned poor. So we self-funded the company until we found what we believe is a company making asset at B26. So we announced the option agreement to earn 80% of B26 in November of 2023, and we were the top performing Canadian junior mining stock of 2023 on the back of that really transformational acquisition. So I look forward to getting into it further. But at the same, really, we see the ingredients that are coming together to have a lot of demand for these polymetallic, especially copper, gold deposits like B26 in the marketplace.
Well, let's hone in on B26. What are the main characteristics of this deposit that have you excited? You've recently added a second drill rig to the phase 2 program there. So if you could also walk us through that and give us a timeline on advancing the project, that would be great.
Yeah, so the B26 deposit is very unique in the fact that since discovery between uh, BHP Billiton and SOCOM in 1997, this has been developed by essentially an arm of the Quebec government, a private company. So we're starting with a historical resource of about 11.5 million tons at 3% copper equivalent that has never been in a public company. So this is a very rare opportunity. Usually a deposit of this size would be with a major, it would be with a large junior, and it wouldn't be sold until it's drilled off. Uh, so really, this is a very unique opportunity that we're starting with a significant polymetallic deposit. So the makeup of that deposit is actually four elements. It's definitely copper driven. We have gold within the copper zone, and we have a parallel more so typical mass of sulfide zinc silver. So we do have the benefit and leverage of having over 400 million pounds of copper contained within the deposit, 250,000 ounces of gold, 11 million ounces of silver, and over 300 million pounds of zinc. So very high leverage in what is a market that needs each of these elements, especially copper. And when you look at some of the majors, you look at Barrick, and Mark Bristow has said that some of the most sought after deposits right now are copper gold. So we really have a deposit that meets the market demand in a jurisdiction that is tier one, that doesn't have the risk of permitting, has great government and First Nation support. So really, as you mentioned, we have a second drill turning at site, and we are fully funded out to Q1 of 2026. So we're going to be drilling about 16,500 meters between now and Christmas. We'll be drilling another 20,000 meters next year. So we're in a great position. And I think it really speaks to the quality of the asset that we've optioned from the Quebec government, and also why Quebec is one of the best mining jurisdictions in the world. Without the government funding through SOCOM to develop this asset, we'd never be in the great position that we are today. So really, a lot of catalysts on the horizon. We have two drills, as you mentioned, about 40% of our way through this phase 2 drill program. We're within a week or two of initial drill results from this phase 2. After that, we'll have very continuous drill results. I appreciate the patience of my shareholders. We started with some very deep holes or deeper holes on the deposit, which has been the lag between the start of phase 2 and announcing the initial results. But after this initial batch, we do expect results every 2 weeks. But really, these polymetallic deposits are very rare. There's one other one in Canada that's situated in Saskatchewan, and that company has a significant valuation and has done very well over the last 4 or 5 years. So we really think we're at the start of what is a very exciting story, and we have accomplished a lot in 6 months, but I do think this is just the beginning.
Abitibi Metals is trading at a significant discount to its peers. Could you walk us through that? And you mentioned that there's catalysts coming up. Some of them you've touched on. Perhaps you could maybe dive deeper into those catalysts that you think could make that valuation gap close.
Yeah, so I think on a year-to-date basis, we started out November 2023 at a 5 million market cap, and we're trading at about 40 million today. So on a year-to-year basis, we've performed very well, a lot better than our peer group. But I think looking at the year, like 2024 as a whole, we had our premium in this, our highest stock price was during our phase one drill program and where we traded up to about 75 cents per share. We're back at about 36 as of today, so about half that price. But over the summer, we had to take a break from drilling only because we needed to process the Q1 drill program, model it out, and really set a basis for a great phase two drill program. So I think that overlapped with a quieter market in the summer, the copper price going from $5 a pound down to 4. So really, we've consolidated over the summer, but we did complete our last financing at 42 cents a share, where my family office participated once again. So we are trading at a bit of a discount to that private placement in April. So really, I think we're in a good position. I think as we start to bring out drill results again, I think the market will see the significance, and we should see momentum start to build again in the stock. Um, Also combined with increased marketing efforts. We were quieter on the marketing front over the summer, given that it wasn't a great time for a return on marketing. So it's part of our strategy that we're going to increase on. But really, we look at our competitors, and we are trading at a significant discount on an EV per pound basis. And I think we're going to be able to bridge that gap by delivering good drill results that substantiate our growth model at B26, which includes the western plunge of the deposit, the mid-level resource growth, and also building around the potential open pit of the project. So I think as we announced strong visuals from the first two deep holes we drilled at the project, that we've confirmed mineralization up to 100 meters deeper than any historical drill hole on the project. So I think the market wants to see results again. I think that could be the start of trying to bridge the gap in our re-rating. And I think we're still a newer story. We've done a lot in an 8-month period since acquiring the B26 deposit, and we've grown a lot during that time. So I think we need to get our story out there. We're attending a lot of conferences coming up. We have a lot of institutional focus, road shows, and marketing. We're also working on a potential resource update that could capture the change in commodity prices, given that the 2018 resource was done at half of today's commodity prices. So there's a lot of things that we're working on. And also, I think just an increased overall improved marketplace for the juniors. We're still in a very tough market for the junior mining companies. Not a lot of financing around. Um, Everybody's trying to chase the hottest thing right now because it's a tough market. But I think we're on the cusp of that changing. But really, we're well financed. We have a clear plan, and we're in a good position as this market starts to rotate.
You know, whenever I speak to the veteran mining investors, the Rick Rules, the Brian Lundins, the Jeff Clarks, and I ask them what are the most important characteristics you look for when you're evaluating a company, they always point to management and the team as the very first thing that they need confidence in before they deploy capital. Could you give us a background on the team behind Abitibi, and starting with yourself and how you came to become CEO of the company in your own background?
Yeah, so I'm a chartered accountant by background. I spent 6 years in audit, mining consulting at Ernst& Young. I worked with a lot of the major producers over that time. Prior to that, I worked with my family office that at the time was a private prospect generator where we developed grassroots assets, finance companies, were directors of companies. But really, my, I guess, role at Abitibi came out of what I believe is a lack in the junior mining sector, and that's prudent capital management. Rick Rue did a study. He studied 1,000 companies, and the average G&A amongst junior mining companies was 60%, 40% exploration. That is not a healthy ratio. That is not how discoveries are made partly fueling the lack of discoveries and why we are in the market that we are in today, but also a distrust amongst management in the junior mining space. Are you actually there to create value for shareholders, or are you there to mine your own shareholders? And I think that that's something that is important to question all management teams. I would say for your following, it's very important to pull up the financials of a company, pull up the MD&A, look at the cash burn. What is management spending money on? And is that truly going to create shareholder value? Or is it going to fly the management team around in lavish conferences and high level marketing to turn over cheap paper that is at the cost of the average shareholder? So I think really what we pride ourselves on and what we have in our corporate deck is 60% of our annual budget goes into G&A, 84% goes into exploration. So really we're putting money into the ground, but we've done that while maintaining quite a liquid stock. We do trade good volumes on a daily basis. But I think my background as a chartered accountant and my experience is that we are aligned with our shareholders. We've put over $3 million of our own capital into the company. That allowed us to self-fund the company to get through what was a tough period until we were able to land the B26 option. And really, we're business operators, and we've taken the B26 deposit and built a team around the asset that has had prior success within the camp. Martin Demers is our chief geologist. He was at the company Horizon that developed the Casa Berardi mine through to take over by Hecla for 800 million. That's 50 kilometers to the southwest of B26. Eric Callio is on our advisory committee. He just retired as the senior vice president of exploration at Agnico, and he worked at the Detour. He worked at and was really a key management team member of the success at Kirkland Lake Gold. We have Shane Williams on the engineering side. He was a VP at El Dorado that developed the Lamaque mine on the the Cadillac break in Quebec. Victor Cantori, he's the CEO of Amex, also a great advisor, Quebec focused, very well connected in the capital markets, great operator. And we have Chris Levy, a key shareholder and also the prior chief investment officer at BlackRock in the US. So we really have built a team that covers exploration, covers engineering, covers capital markets, and a lot of which are shareholders of the company. So I think I can't promise success and guarantee success at Abitibi, but what I can say is we're well aligned with shareholders. We're putting capital to work and answer the unanswered questions, as like Rick Rule likes to put it. What are the unanswered questions, and how are you funded, and in what time frame are you going to deliver those answers, and what could potentially be the negative consequences of that? So we've covered that basis, and really we allocate our capital where we think will provide a good return for our shareholders. So I know that's quite a tangent, but yeah, that's I guess a bit of a background on myself and our philosophy at Abitibi.
I really appreciate all of that insight into the inner workings of the company. I want to end by opening the floor to you. Is there anything about Abitibi that you want to discuss or that you think potential shareholders should be aware of that we haven't covered yet, or perhaps some points that you'd like to reinforce?
Yeah, so I think, as I mentioned, there's thousands of junior mining companies out there. So I appreciate your audience listening to our story and consideration. So I think, again, like we're really well aligned with our shareholders. We put money to work in the ground. We have attracted what I believe is a world-class advisory and technical team to oversee development at B26. We're trading at a discount of our last private placement, where ourselves and other strategic investors continued to finance the company. We have strategic shareholders like Frank Giustra, Greg Shimandi, very well-known mining investors in the space and very supportive shareholders. And at the end of the day, I think when your audience is looking at junior mining companies, there's a lot that can be done to influence the short-term price fluctuations in the company. You can have high-powered marketing, you can have blips in the general commodity, but what will actually determine the success or failure, in my opinion, of a junior mining company is if what their development developing has a demand or is saleable. So when we look at B26, this is a copper gold deposit with the zinc silver addition. This is something that the majors are openly looking for, and the majors are moving from just pure gold mining companies to either gold base metals or even looking to be base metals producers. We are in a jurisdiction that is great for permitting. A lot of the majors already operate there, and we're in an area of the Abitibi that has a power line that runs through the project, has all year access roads, so great infrastructure. So I think we're excited. We're still early on in the Abitibi story, and we have a lot of catalysts on the horizon.
Well, the Abitibi website link will be in the description below, as well as a direct link to the company presentation and social media for people who want to follow the company and learn more. Jonathan, this has been a fantastic conversation. I really appreciate you coming on the show.
Yeah, thanks for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.